part of our research. So those fundamentals I talked about earlier are critical. These are only some of the, I suppose, headline fundamentals that I wanted to share with you tonight. So supply demand both at a rental, at a project level. So some of the data that we collect, for example, includes what's coming through in the project pipelines per state, per suburb, per city, depending on location. So by that I mean both at house and land dwelling development through to medium to high density, so units or townhouses or apartments, to then really try and isolate or find places where we can see a lower supply than what's there in terms of demand. So there are, for example, there's a suburb in Melbourne where in recent times it has shown that that particular suburb can only sustain about 283, it's not about, it's an exact number, 283 new dwellings per annum. Now, last year they built 1,283, and the forecast for next year is a greater number than 1,283. So there's some of the things that we look at. The population, so the big thing about not just Melbourne, but around Australia, and New South Wales is certainly quite healthy as well, is we continue to have great population growth. So, people forever talking about gluts of apartments and houses and land and blah, blah, blah. Yes, and that'll still, be there in some areas, and talk about those, growth corridors, etc., or even Melbourne CBD, which you'd never invest in. But population, is one of those fundamentals that will take up a lot of that slack that's sitting there at the moment. The demographics, the industries within. So making sure that if you're going to look at a regional hub, for example, what's supporting that hub in terms of industries, and it can't just be one. That's a real key point. So affordability, key from the point of making sure that it's affordable, not just from you buying it, you owning it and funding it, but also affordable in terms of if you're looking at the forecast of the yield that you want, the rental yield that you want at the other end, you've got to make sure that that suburb or that location can afford that growth that you're expecting, to make sure your investment is going to be sound. And the other thing too, and coming back to that price point I talked about earlier, we've had clients come in and say, look, I've got a borrowing capacity of $1 million and I just want to buy one property. We encourage you to think about it like we do with business. Multiple streams of income. So if you've got, for example, $1 million capacity, why not look at two? So break it up into two different locations, minimize the risk, and have multiple streams of income. You've got two streams of income, two tenants paying month in, month out. One drops out for a week, it doesn't matter. There's still another one there, and so on. So that's part of that education. And ethics, big one on this, on the actual ethics side. So as a real life example of ethics, and we're very, very strong on this, in our long history now, we've had a couple of instances where for health reasons, a couple of clients have been unable to, and quite serious health reasons, unable to complete their transactions in terms of settling. We've moved those contracts onto others. That's part of what we do at our cost. But also a recent example, which I thought would be relevant for the webinar tonight. So we just had a recent customer, a lovely couple, and took that first step. We went through probably, 4.5 months of gathering data and teaching and educating. And then they finally said, you know what, get it, let's do it. So they took that first step. Now, we only just learnt this week that unfortunately she's become very, very ill. And even though they've got an unconditional contract and it's all signed up and so forth, the first thing I did after meeting with them this week was rang the particular developer, and they've agreed they're actually going to rescind that contract and simply cut it up and move on like it never happened, which I think is a great outcome for them. So there's a lot of companies out there that will simply say, well, bad luck, you signed up, not our fault. Ethics is very, very strong with us. In terms of those fundamentals, and then carrying through into, I suppose, real life examples. So these on the right hand side here, I've actually just pulled out some of the data that we've seen in the recent sort of 2 to 3 weeks. Some of the locations that we've now been putting our clients into for the last year or so have seen over 8% growth. That was actually on apartments in a location that's only 7 kilometres from Melbourne CBD, which is phenomenal. 15.7, which was on a house and land estate, which is in a regional location within Victoria, but again, outstanding results. Again, people say, well, that shows me that, apartments don't grow as fast as houses. Well, no, that's not the case. I've only taken, last 12 months here, and we've got two different, property types, two different locations, demographics, etc. We can't forecast and work out whether or not, what they're going to continue along this sort of path. But also the price points on these are a little bit different as well. But it's important to share some of those outcomes. Location C, which is not in Victoria, in the last 12 months has seen a negative 7.3 growth pattern, and that's actually on apartments in a very well-known capital city in one of the states. So we saw that a long time ago. We saw it through the finance business with the reports that were coming through and some of the data coming through that we should steer clear, and we did. And that's the sort of results out. Rental yields should be nice and strong. Talked about those views online. We see locations where people rave about or go and buy in particular locations, and you look at some of those views and they're very, very poor. So there's not a lot of people looking out there. The other great example is we're seeing now a pattern in some of the locations that our clients are in, and the tenants that are coming through, they're actually paying in advance. And we actually had it with our own property in our own self-managed super that we only settled late last year, and the first tenant in there actually paid 12 months in advance, which is great for obviously cash flow for the fund or anyone else. So the type of